what's your risk tolerance as well?
Regarding the asset itself?
Yeah, regarding what you're talking about investing in. I don't care if you're talking about stocks or if you're talking about real estate. An investment, by its very nature, incurs risk. And so if you're sitting here, like I was telling you, hey, I have $100,000. Well, how would you feel if that suddenly dropped to 80,000? Oh, well, I can't do that. Or do you need to have access to that 100,000 within, say, 2 years or 3 years? Mm-hmm. Well, yeah, I need to be able to take it out at any time. Then you shouldn't be investing in an asset like this. Mm-hmm. You know? There were no properties out there, because just like the residential side, a lot of your sellers, all of a sudden, and this is a real example. I had somebody, I told them their property was worth $3 million about 2.5 years ago. Well, they finally decided to sell it. I said, well, your property is actually worth only about $2 million right now. Or I forgot the exact number, but basically knock it off by over 20%.
Are most of the sellers participating in the financing too, Tim, or are they wanting to be cashed out?
Well, I'm known for creative deal making, okay?
Explain that a little bit so they understand.
Owner financing in some cases. A lot of people don't realize when interest rates zoomed up, last year, commercial real estate in general dropped 20% in valuation.
Get out of
So
here.
that's a real example. Those are real examples.
Why, Tim?
Your property was worth $1 million before, and now it's worth $800,000. Yeah, the development and adaptive reuse are big things. I mean,
let's talk about that. What is that, Tim? You're talking Chinese now.
Oh, well, adaptive reuse is when you take something that's existing and you do something else with it. Right?
Is that like a condo conversion out of apartments?
Yeah, you can do that.
Yeah.
For instance, back when retail started declining, somebody I know that I know pretty well, he actually sits on the board of a REIT. His company went out and bought an 850,000 square foot mall and repurposed it and basically did I forgot if it's a FedEx or an Amazon distribution center out of it.
Have you ever wondered how commercial real estate works? We're in single family homes, but I'm always curious about the big strip malls and gas stations and mom and pop stores. How do those transactions actually come about? Well, today I've got a commercial real estate broker in the building with me, Tim, and we're gonna go over the ins and outs, the pros and cons of commercial real estate. Let's do it. Okay, class, it's Kris Haskins with therealestateroundup.com. My mission and ministry is to raise your financial literacy through real estate investing and entrepreneurship. So today we have Tim Churchwell in the building with us. Tim founded and currently directs the Commercial and Special Markets Alliance for Exit Realty Central and Services, and you're the Executive Vice President of TC Holdings, LLC. You earned the prestigious CCIM designation, that's the Certified Commercial Investment Members designation, in 2013, and you have been elected to the Global Board of Directors for the CCIM in 2024. I didn't know this. You're the current Vice Chair of the NAR, National Association of Realtors, Commercial Economics Trends Forum, and also sits on the NAR National Committees for Commercial Real Estate and Commercial Research for Virginia, for the Virginia Economic Advisory Board. That's cool.
And for NAR.
And for NAR. You speak around town about commercial real estate and nationally, and you recently started a coaching program designed to help residential agents and investors transition into commercial real estate. That's some good stuff. Let's get right into it. Ladies and gentlemen, I have a million questions about commercial, and as we're going through this talk, make sure you put your questions in the chat so we can get Tim to answer them, all right? Tim Churchwell, how you doing, buddy?
I'm doing well, man. How are you doing?
It's good to see you, bro.
It is, man. What a beautiful, thanks for arranging this weather, by the way.
We needed this rain. The pollen is driving me insane, Tim.
Oh my gosh, no kidding. I tell you, it's.
You got allergies too? Or?
Oh, big time.
Yeah, I'm dying. So commercial broker, Tim, we're gonna get into a little bit. I wanna go high level, then zoom in. I feel like everybody wants to be involved with the commercial real estate.
Everybody does, whether it's investors or residential agents, because everybody thinks that every deal's huge and you make a huge amount of profit on it, and right? It's kind of got rose-colored glasses, as we used to say in my old profession. So,
What does that mean?
Everybody's seeing things through these, oh look, everything's all rosy through these glasses.
Mm-hmm. Oh, okay.
Yeah, through the lenses, and it's like, no, there's a lot of stuff that goes on. I mean, a lot of deals lost, takes a lot of time to close, and it can fall apart at the last minute.
Mm-hmm.
So yeah, I remember one day I lost 2 deals in one day. It was $90,000 in fees to me.
Oh wow.
Yeah.
That's not fun.
Yeah, and that's after putting in a lot of time on both of them. That happened as soon as they started jacking up interest rates.
Recently?
Yeah, so that was less than 2 years ago.
Tim, how long you been in the game? Give us a little bit about your background. I know you're doing financial services, and how did we get to being a commercial broker?
I built a financial planning division for a New York Stock Exchange firm.
Where were you, by the way?
I was in Richmond for that, but I did business nationally.
Okay.
And then got out of that, started consulting. But I'm a family man, community man, And so it's hard doing that type of stuff when you're getting on an airplane on Sunday, hoping to be home by Friday.
Oh, wow.
And somebody told me, Tim, you ought to do, they'd always told me that. Tim, you'd be great at real estate. I always had an interest in it. I had a lot of clients that did real estate. And so I started out residentially.
You were a salesman?
Yeah.
Okay.
Yeah, just an agent. And
what year was that, Tim?
I got licensed at the end of 2004. So 20 years ago now. Yeah,
That's so
yeah,
cool.
over
Me
20
too.
years.
I started in 2004.
Did you?
Yeah.
All right. Yeah.
Y'all getting some veteran stuff here today.
That's right. I know, man. Whew.
We old, dog. We old.
Now we're wise.
Wise. I'll start using that one. I'll start using that one.
And then we did very well at it. But because of my background, I got dragged over to commercial.
Tell me about the transition.
Well, when it first happened, I had there's another residential agent. He was a retired New York City policeman. And
you still in Richmond?
No, that was I moved my family to Smithfield, Virginia. I was on the road a lot. It's a Mayberry town. I love that. Family felt safe. Everybody knows each other.
Yeah.
And so no, I started out there. I didn't even know the area. This is back in the days before we had we could navigate on our phones. So I'm using old map books.
Yeah, GPS don't work out there, does it?
Huh? Well,
GPS,
no, it works.
Did it back then? It might not work in Smithfield.
Yeah, I think it did. I did wind up buying a TomTom, but yeah, if you guys remember that. But yeah, it was
dating ourselves.
But I didn't even. I mean, give you an idea. Heaven forbid if I'm out showing a client around or some clients around, and they wanted to stop for lunch or something. I had to ask them where McDonald's was. I mean, I didn't know the area. I didn't know anybody, but I very quickly rose to become one of the top agents. Actually, I was nationally ranked in just a few years.
Yeah.
But then I got dragged over by a guy named Jim Seminara. He was working on he was a hard worker. He picked up the phone, door knocked, you name it, and he got this other side liked him, and it was a commercial deal, a large commercial deal. He goes, Tim, I don't know how to talk to people like that. And so he asked me to come aboard. And I said, well, it's a different world. He goes, yeah, but you know how to talk to boards of directors and people like that. I said, all right. Well, I went in. We went to a meeting, and it very quickly became. I realized then I didn't even know what I didn't know.
In that meeting.
And as a matter of fact, the actual owner of the property, and we're talking about a $16 million deal. Okay?
You went to go talk to the
the
people that owned it.
That's the thing. You got to pick up the phone. So we pierced the corporate veil. We found out who actually owned it, where everything, contacted them, got a meeting set up because we actually had a buyer on the other side.
Wow. Okay.
Yeah, as well. The buyer wasn't represented by us, but their agent. We know their agent, and we knew he was trying to get in this area, and we happened to know about this land. And so we went and met with him, and we're sitting there, and it very quickly became evident. This is a whole different world. I didn't even know what I didn't know. And I actually pointed out I actually told him, I said, sir, look, if it's not evident to you, we don't know exactly even the language to ask her. He goes, yeah, I could tell. He goes, but in that case, let me show you something. And he just kind of clears off the table of everything we were doing, and he pulls out some stuff, and he starts telling us the stuff that we should be saying, the stuff we should be asking, and all that. And
what made him do that, you think, Tim?
People that are really good and are successful at what they do, most of them don't mind sharing and working with you. I mean, especially in this case, because if we did lay this out correctly, he got what he wanted too, right? So,
got it. As the seller.
Yeah, as the seller, and we would have represented him in this case. And so, yeah, he was great to work with, and I said right then, and I've always had a policy, even from my financial planning days, right? You do no harm to your client. Well, if you don't know what you don't even know, then you're hurting your client trying to represent them. Just because I held a license doesn't mean that I knew what I was doing. And so I very quickly set out to find out what the, how do I be, and also the second thing I'm driven by is being the best.
I got that here. Where does that come from, Tim?
It just always has been, just a hard drive. I mean, I used to be a competitive kickboxer.
Oh, yeah?
All this other stuff.
Like the stuff on TV, the FC?
Well, that's MMA. I never did MMA. MMA wasn't a thing back then.
Okay.
But
kickboxing, that's the old Van Damme type stuff, dude.
Yeah, that type of stuff. The old Chuck Norris stuff, that type of stuff, yeah.
Got it.
And then...
So you took that drive into business?
I took that drive. Getting out of college, the job market was really poor for new college grads when I got out and everything else. But
what'd you go to school for? What'd you go to school for, Tim?
Finance.
Oh.
Yeah. And then got a job as a stockbroker, as a stockbroker trainee.
You was in New York?
No, I was not in New York. It was a New York Stock Exchange firm, but I was not in New York.
Okay.
My training started out in Raleigh, North Carolina.
Well, you've been around.
The regional headquarters down there.
Got it.
And then got selected for the National Fast Track program. And the first thing they tell you, congratulations, you're in this program. We have a mandatory 25% attrition rate. So if all of you are the best of the best, we're still firing 25% of you.
Oh, wow.
Yeah.
Wow.
And but made it through that, and then built a successful stock brokerage business. Became, got my branch management license and everything else. I was one of the managers overseeing a $275 million portfolio, training stockbrokers up and down the East Coast. Stuff like that.
Gracious.
And then I sold that business and built a financial planning division for a New York Stock Exchange firm, and got out of that. And then did consulting. Didn't realize, maybe this isn't for me.
What, jump with the financial planning stuff?
Jumping out of financial planning and I got into consulting.
The consulting thing. So you didn't enjoy that?
I enjoy the teaching and everything, but at the time, young kids.
What year is this?
Oh man, when was that? Actually, 2004.
Same time you get, okay, so you're getting,
you
did that quick then?
Yeah. And, it paid very well, but what's the deal of making money if you don't have your why? And my why has always been my family, right? My family, my community.
I love it.
Now my kids are grown, so I travel a lot more now. But but back then, my son needed to see his dad.
Commercial real estate, Tim. I feel like everywhere I go, everybody wants to own big buildings and do big deals.
I do too.
And I want to ask you, you do big deals, right? I mean,
I haven't done one the sizes of things. They're different scales. So.
Okay.
The majority of my deals are $3 million and under.
Tim,
not all of them, but the majority.
That's a big deal, bro.
Yeah.
We're in the realm, especially in Virginia. But I am seeing some bigger stuff. I just saw it was a mall that somebody bought for $22 million over off Greenbrier.
Oh yeah, Greenbrier. Actually, I think the largest deal in Norfolk was $52.4 million when Buddy sold the building downtown, the old Bank of America building.
Okay, yeah, there's a few things floating around.
That was the biggest deal in history in our market, actually. At that time. Yeah.
Cool. I thought that Greenbrier deal was a steal, man.
Look, it's not. It's not what you pay for; it's what you can sell it for, right? What's the value afterwards?
Yeah. Do you know anything about that? What they're going to be doing with that?
I don't.
I'd like to know.
I don't.
Got it.
But development and adaptive reuse are big things. I mean,
Let's talk about that. What is that, Tim? You're talking Chinese now.
oh, well, adaptive reuse is when you take something that's existing and you do something else with it. Right?
Is that like a condo conversion out of
Yeah,
apartments?
yeah, you can do that.
Yeah.
Another situation, for instance, back when retail started declining, the old bricks and mortar, somebody I know that I know pretty well, he actually sits on the board of a REIT, and his company went out and bought an 850,000 square foot mall and repurposed it and basically did I forgot if it's a FedEx or an Amazon distribution center out of it with them as a tenant.
That's pretty cool.
That's adaptive reuse. Or you take an old hotel and turn it into apartments. That type of stuff.
You know, I saw a lot of that back when I was in the music business, Tim, in the early 2000s in New Jersey.
Really?
Warehouses, people were taking these huge warehouses and turning them into apartments and stuff. You know, I saw it, but I didn't really know what was going on. You know, I didn't know the inner workings. But for someone to see that, Tim, you got to have some training. Let's rewind. I want to make sure. So you're a commercial broker. Tell me about. Go ahead.
Well, broker is a term that we use in commercial real estate.
Okay.
Legally, I guess in Virginia, you call us agents. I'm not a broker. I don't have my broker's license.
Okay. You're a commercial real estate agent.
Yes.
What do you do?
What do I do? As far as being an agent?
Yeah. Because see, people hear agent, they think single family home.
Well, I guess maybe that's one reason why we call ourselves brokers on the commercial side. But no, basically we broker deals, right? We analyze and price properties, we market properties, we reach out and find buyers. You know, it's a lot more complicated than just say put it in an MLS for us. So, you know, we actually have to pick up the phone and do all this other stuff and reach out. But we bring buyers and sellers together.
Bring buyers and sellers of commercial buildings. Tim, give me a range of what commercial is.
Commercial is comprised of several sectors. You have the multifamily, which is considered 5 units or greater.
Got it.
All right. Anything below that, you can get a residential mortgage on. It's a residential, that type of stuff.
Okay.
And then you go into, let's say, retail. Retail is retail. It's a store that you're looking at down the street, a shopping center, a mall. Gas station is retail. It's more of a specialty retail, but it still falls under retail.
Okay.
Yeah, so all the way up to large power centers and malls and stuff like that.
Hotel?
No, that is a hospitality sector.
So that's not that does not fall under the umbrella. I didn't know that.
Yeah, and then you get office and you get industrial.
Office, industrial.
Yeah, and then you get the specialty sector, which are things like churches, civic centers, stuff like that, right?
Man. Storage units?
Storage units, that I believe that technically falls under industrial, believe it or not.
Industrial. So
just a subsector.
Okay. Do you do those too?
Oh man, my specialty.
What is your specialty?
Is investment, sales, and development.
Investment, sales, and development.
Yeah, that's what I specialize in.
Give me a typical or your ideal. When you say specialize in it, what does that look like? Somebody buying some land?
Substantial. Well, as far as specializing on investment sales, I have a substantial amount of not just training but experience and connections and people I can reach out to on pricing investment deals. You know, because one thing, I don't know if you've ever seen me speak a trig or something like that, but
it's been a long time. Man.
Okay, but one of the things I do at all my broad range without specific focus group topic, like trig, for instance, I'm talking to 100 people, all different levels of investors in there. So the first thing I do is say, look, here's how you calculate a capitalization rate. So I'll run through that, and I know for some people in there, it's like, oh, this is old hash. But other people, they're brand new.
Everybody's different.
Yeah, so everybody's different, right? So I do that so that people can understand across the board, at least conformity of what is a cap rate, because a lot of times we don't even speak in price tags in the commercial realm. We speak, hey, what's your asking cap rate on this when it comes to investment sales? So you need some type of a standardized way to calculate. So if you say 8%, I'll know how you got there and go, okay, it's 8%. So anyhow, I throw that out there. It's a very simple thing to learn. And then we go through, where's it going with all this?
We're talking about your ideal situation.
Oh, and how do I do it? Yeah, and what makes me a specialist. So then we go into that, and I'll teach that, but then we go into, there are things in there that you have to know though, okay? And it's specific to type of property, size of the property, condition of the property, and location. What's a standardized vacancy rate on this? What's a normalized vacancy rate? For instance, a lot of your listeners are familiar with apartments, right? Somebody says, oh, look, I've got this 10-plex and I never have a vacancy, I have a waiting list. Well, first of all, everybody's going to have a vacancy rate, period. You put it in because it's a risk adjustment for you as well. But the other thing that they look at is, if that's the case, if you always have a waiting list, you're either A, taking clients you shouldn't be tenants you shouldn't be taking, or B, you're charging way too little amounts.
Yeah.
Yeah, and so we do that. You also have to know what is a normal pricing cap rate for that property when you're pricing it. What would a normal investor reasonably expect to pay for this property? So, if you've got a property that's generating $100,000 in net operating income a year, and an investor says, look, normal market conditions, well, not normal market, for the market that you're in, but a normal investor would reasonably expect to pay 10% cap rate on that. You now know that property's worth $1 million.
Got it. Okay. So what is it? Do you work with more buyers or more sellers, Tim?
Oh boy.
And what's your preferred?
Listings are easier, and listings generate more leads.
Well, you just said you do more than just put it in the MLS, so.
There's substantially more. I
know.
It costs a lot more money to be a commercial agent too. A lot more.
You're talking about just to have the license?
To be to practice being a commercial agent, right? My budget, and this doesn't count things like networking, any of that other stuff, right? Golf tournaments, if you're into that type of stuff, all this other stuff. It doesn't count any of that. Is about $27,000 this year.
That's going to be for your marketing?
That's my software. That's
I know LoopNet is thousands of dollars to have it anyway.
LoopNet in our market. Actually, I've got a meeting with them next week, I think, because I think they're trying to raise the price again.
What?
You do annual subscriptions, but right now it's about $95 per month per listing to market.
Tell my viewers what is LoopNet and why is it so important to you, Tim?
I don't want to endorse LoopNet.
Oh, you don't? Why not?
Yeah.
Well, I'm just saying.
LoopNet is a necessary evil. Okay. Well, it is. They're owned by CoStar.
You can say the same thing about Ring. They're like the mob here.
Yeah. And LoopNet is the #1 commercial real estate property marketing platform out there. It's similar to an MLS type of situation, right? But it's where the public generally thinks of, hey, I'm going to go search for commercial properties, and they're searching LoopNet. So therefore, we do have to put it on there. Commercial agents, your professional investors, stuff like that, don't look at it. We put it out there for the general public to see.
Hold up, investors don't really look at LoopNet?
Not your professional ones. Your professional investors will do one of two things. Either A, they have a subscription to CoStar, which owns LoopNet. Every property on LoopNet is on CoStar, but only, I think the numbers that CoStar put out is that only 10% of properties that are in CoStar are on LoopNet.
So CoStar is going to be where to go now then?
CoStar is, but CoStar is also incredibly expensive and it requires an annual subscription. And there are different prices for investors, brokers, you name it. And also different levels of the information you can get.
Data.
It's all about data, right?
Data.
By the way, CoStar now, they also own apartments.com now. They own what's the one for hotel sector? I think it's the Star Report, and they just bought out homes.com.
Data, dog. Data, man.
Well,
Forget any of these industries.
Yeah.
Data is destroying us all.
Well, it's great to have, but the problem is, though, remember when the internet first came out? Right?
I do.
Everybody was like, oh my gosh, information at your fingertips and everything else. Well, that's great, but what happens when, it's the difference between taking a drink of water and getting waterboarded, right?
Mm-hmm.
I mean, just so much coming at you. Just because you have it accessible doesn't mean you know how to interpret it.
Yeah.
And that's the issue. It's like, how do you actually analyze it? How do you do this? But professional investors, either A, they'll have a subscription to that, or B, they just have a great relationship with a commercial broker and they'll just rely on the broker.
So you would prefer to do, you said prefer to do listings. Tell me, how does it come about, Tim? I want to talk to you about the salesman side and the owner side too. How does it come about? Are you out there shaking the trees?
For the most part right now, fortunately I've built up enough of a reputation and stuff that the majority of my business comes from referral. This is referral based, right?
Okay. You're like the man in Hampton Roads. I mean, you're the
guy.
I'm
known as the commercial guy in the local market, especially with a lot of my referrals come from residential agents.
Because they don't touch it.
Well, the good ones out there realize that they don't know what they don't know.
They should do that.
Unfortunately, in the state of Virginia, though, it's not against the law for a residential agent to do a commercial property. But for instance, they won't pay the LoopNet fees. They won't get access to CoStar. They won't be able to pull comps. True comps on the property, since very few commercial properties are actually in the MLS, right? And I try explaining to them, first of all, even just on the marketing side, it's like taking a listing on a house and not putting in the MLS. Are you really doing your client a service?
That's true.
Yeah, so I get a lot of referrals from the good ones there. They say, stick to your lane. I mean, I'm licensed to do residential. I'm not the agent you want to buy or sell your house. Trust me, okay? And same thing on commercial. Your good agents know what they're doing. Let them do it. I'm very good at what I do. That's why I said it gets me when I see people say specializing in commercial and residential and individual. I'm like, I probably knew about 4 people in this country that could truly claim that.
To do both.
That's truly a specialist in both.
How much brain space do you need?
Well, I'm sorry, it's up to 7 now. I do know 7.
Really?
Yeah.
It's a lot of brain power.
They're all CCIMs, but they also all hold the GRI, the MAI, which is the Commercial Appraiser Certificate, all this other stuff, right? Unfortunately, at least in the state of Virginia, and there's quite a few other states, but some are changing this now. If you look at any of the other professions out there, you look at appraisers. It's a completely separate field to do commercial versus residential.
Night and day.
Separate licensing.
Night and day. Give us a real quick 30,000 view of that real quick, Tim. Residential is going to be based on what?
4 units or under housing.
I mean, tell us a little bit. So we're looking for comps, we're looking for souls on the residential side. Commercial side.
Commercial side, you're doing the same thing, but one, you got to have access to the software. Then you got to know how to interpret the data, and then also if you're truly pricing something, you have to also know how to do adjustments to that data.
But don't we still have to worry about income? You got
that's NOI. That's the second thing that we do is the income analysis approach for the valuation.
Ain't no income analysis in residential, bro.
Oh, there should be. If you're an investor, in my opinion, if you're an investor on the residential side, you should be able to know how to calculate a cap rate. And by the way, your lender, even residential lender, will kind of tells you part of how to do that. Because vacancy, you have your gross rental income, subtract your vacancy and credit loss, right?
Long-term holds.
What happens when you go to a residential lender and say, hey, I want to buy this investment property? They tell you what that vacancy number is, but in their case, they're saying, well, we'll count 75% of the income.
Got it.
What they're saying is 25% vacancy.
Yeah.
The only difference is that they don't drill it down to everything else, right? But we'll drill down to the net operating income and the income analysis approach. And, I mean, realistically, when you're valuing a property, yes, we do comps, sold and on-market comps, and we'll make adjustments for all that. But we also have to do the income analysis approach.
Yeah.
And we'll say in 70% of the decision making from even on the underwriting for appraisal is going to be based on the income analysis approach.
That's what
right?
I'm at. Yeah, that's what I'm saying.
So I mean, we do all that, and I've done probably over 100 valuations for lenders here in Hampton Roads. I got CREOBA certified, Commercial REO Brokers Association certified, plus being a CCIM, an investment specialist, stuff like that. I also, that's another thing I do is value properties for lenders, for accountants, for their clients, for attorneys, for instance. It's like, hey, my client's got this. It's one partner's trying to buy out the other. What's the real estate valuation? Or for an estate, or for a family, estate attorneys, for instance. Well, they own all these different properties. What's the value of them combined? So we can properly divvy up assets or do this or that.
Earlier, you were talking about some people that. How do you know when you're ready to move to a commercial, Tim? You told me obviously people come to you all the time. What do you ask?
You talking about an agent, or you talking about an investor?
I'm talking about a buyer. An
a
investor.
buyer. Well, one, have they ever bought, sold, or leased a commercial property? Any type of experience whatsoever with it.
All right, out of 10, how many people have that? Got to be very few.
Yeah, maybe 10%. Yeah,
I mean,
yeah. So
are you whacking the other 9? So you got
pretty much.
You're just whacking them.
Well, I'm not whacking them. I like helping people.
You can't help them if they're not ready to be in your lane, bro. I mean, you're in a big different lane.
I mean, it's like, look, I appreciate it, but here's what you got to know. First of all, you're going to need, you should, especially as an investor, okay, you're going to need a bare bones minimum of 20% down. That's minimum, probably more.
What does that mean in our mind? That's got 20% equals a number, though.
Yeah. So, well, one question I ask when people are talking about that, I say, well, how much money do you have right now for a down payment on an investment?
I love it.
Yeah, and they'll say, oh, I've got $100,000. Okay. In that case, you're in no experience in this world before, so a lender's going to be extra tight. So great, you can buy approximately $350,000 property.
That's it.
Well, Tim, I can't, what can I get? Like, a lot of them want to move up to multifamily. That's the next step, right? And I'm like,
so they think.
Yeah, so if you can find a multifamily deal out there for that price.
$350, that's a single family home.
Yeah, so they get disappointed, and I hate doing that to them. But a lot of times what I'll tell them, and Kris, you knew more about this, on the residential investors like that, I'll say, hey, look, why don't you get together with some other residential investors, either that you know, or B, if you're part of, like part of your group, for instance, maybe they can network together, pull their funds,
group economics,
and then form an entity to go out and purchase these properties.
I got it.
Not to mention, then they're diversifying risk. Because if I came to you, if you came to me and said, hey, I've got $100,000 out of pocket right now that I can afford, but I can't afford to lose 20% of it overnight. Well, maybe you're not ready to take the risk to actually invest yet, right? So you're not just pulling your resources, you're pulling your risk. So you're lowering your risk. Are you going to get as great of a return? No. On the other hand, one, the larger the property, the more you can do, economies of scale. Second of all, you're also leveraging or lowering your risk.
Spreading it out.
Yeah, you're spreading your risk out.
People. So, what is the majority of products that people come to you to sell? Is it gas stations? I mean, what is like the most?
I get calls for everything. And it changes, right? Depending on what's hot in the market right now. Shopping center, for instance, might be a case. A freestanding, yeah. Well, we've got neighborhood centers, basically smaller level deals. I'm not the guy you call up to sell a mall. That's not me. There are specializations within specializations in my field.
Okay.
And like I know somebody that all she does is malls. Big time malls around the world type of thing. I'm like, okay. Or another friend of mine, specializes in hotels, resort hotels.
So your tip, do you have if I were to say, Tim, I can pick any of your clients to come through the front door and you represent them, who would it be? Oh
man, somebody that's ready, willing, and able, right? So ideally, somebody, and I'm starting to move kind of more into this. So this is my financial planning background coming into place, right? I want somebody who wants true advice. Like I have a consulting company that's really building up lately, because people are like, hey, look, Tim, I just want you to take a look at my portfolio.
Commercial or residential?
Commercial.
Okay.
Well, in this case, I can throw the residential in it because it becomes a sector on its own, right? And take a look at my portfolio and find out, am I too heavily weighted in something? Should I buy something else? Should I lighten up here? That type of stuff. So I might say, okay, well, look, put more money into retail. And I'm not saying this, by the way, but right now, put more money into retail, but you're way too heavy into, well, let's flip that around. Actually, I've been selling retail a little bit. Last year, I started advising people to buy office space, all right? Which I wish I'd have advised them to wait a whole lot more, because office is the hottest thing out there right now.
Really?
Well, ever since, when Trump took over and everybody had to go back to work. DC in particular, man. DC, I don't know if you've been to DC recently.
I haven't lately.
I do. I work throughout the Mid-Atlantic. So I'm up in DC a year and a half ago. And I mean, you heard birds chirping around in the office building. Well, the U.S. government's the number one employer in D.C., right?
Yeah.
So they are also probably the number one tenant. Well, they didn't make anybody go back after COVID. Trump actually started forcing people back. So all that office space was literally vacant. I mean, just valuations, pennies on the dollar. A lot of them were being bought to be torn down because of some studies have been done. Basically, if you have a building with 15,000 square foot footprint, okay, a high-rise building, you can't really convert it, because a lot of people talk about, let's make it in apartments. Some places have done that, but not with that large of a space. And the reason why is because nobody wants to live in an interior apartments with no windows.
Yeah, can't be done. Yeah, nobody do that.
Right? So you heard birds chirping. These buildings were being purchased for literally pennies on the dollar, being torn down, and then built back up into apartment complexes. Well, now the government made everybody go back to work. I mean, I know people that are literally, I met this one guy last month. He was moving from Florida, worked for the government, moved to Florida, when they went, hey, you can work at home. And now he's actually moving back to D.C.
Oh, that's right.
So housing right now is huge up there. Single family homes. D.C. is one of the hottest markets for even the build to rent market. Large corporations are like I think Blackstone's one of them, have been building whole neighborhoods, subdivisions out.
To rent?
Just to rent. Not to sell, just to rent. And it's huge. I mean, I think we hit another 39,000 of those homes last year were built in this country.
I didn't know that.
Yeah.
So you would prefer to deal with somebody that's already kind of in the commercial space?
I mean, well, that's all preferably. It doesn't have to be that way. That or I like helping people. I like coaching people. I love training people. All right. The problem is it's leveraging of time. You and I have talked about scalability and stuff like that. And so if I'm doing 20 meetings a month, you figure that's at least 25 hours of my time, because you got that time before and after, right? That I'm meeting with people that don't have the resources, the wherewithal, or anything else to actually do business.
Got to screen through them, sound like.
Well, that's kind of the key. But and you and I were talking about this, and I'm probably going to do a seminar soon here locally anyhow. If you have a group of investors like that, yeah, look, I know you're interested. I know all this other stuff. I'll tell you what, I don't mind spending a couple of hours talking to a room full of people.
Yeah, group coaching.
Yeah, exactly. And, and then on top of that, they can talk to, I talked about leveraging your assets together.
Yeah,
well,
relationship.
Who else? You've got a whole room full of people that are wanting to do that with you, right?
Got it.
Or I don't know if you do a mastermind group with your coaching, but there's a way for, that's a topic. They, leverage, pull your assets.
Yeah, we'll talk about that. So if someone's new, Tim, I'm just thinking, Ron LeGrand told me, he told me personally, those Kris, commercial is where the prostitutes and the pimps hang out.
I'd rather be the pimp than the prostitute.
Yo, he told me this.
Wow, all right. I hadn't heard that one before.
He goes, there's no oversight. If you buy a bad deal, You got a bad loan.
That's not quite true, just so you know, all right? It is kind of the wild, wild west. A lot of the same rules don't apply to us. The disclosure rules and stuff, like the fair housing rules apply to a certain extent, okay? They apply, like if we're talking about a multifamily deal or something, that's a different issue. But we can sit back and talk about race, age, everything, gender, in particular neighborhoods and all that, because it's a business decision for you.
Wow.
Yeah. And
what about somebody selling the condition of the property? Is it on you to verify that? Because in residential, if you sold something, you got the disclosure stuff,
material issues. You are still supposed to disclose true material issues in a property if you're aware of them. Okay. Right?
We're talking about millions of dollars here.
Yeah, the penalties aren't quite the same. Well, hopefully if you're buying millions of dollars, you're getting so we don't use, at least in our market, we don't use inspectors. We actually use tradesmen. Okay, I might bring in a general contractor to do a cursory for the client, or even my own self. But then it's like, hey Tim, probably want to get an HVAC person, check out that HVAC.
So you're getting a true tradesman to say this is going to be
plumber,
X
electrician.
Before you buy.
And I have a GC usually overlooking it, right?
These are commercial guys.
Yeah, commercial GC.
Could you explain the difference?
Yeah. It's kind of like I was talking about on the residential side. You may have a license, but it doesn't mean that you really know all the codes. You know the contractor, so you can give true estimates and everything else, right? You're also on the commercial side. I mean, you hear stories all the time on residential contractors, and they're not all bad by any means. But he never showed up, or he took my money and ran. He came in.
A lot of that, bro.
Yeah, he said that this would be done in 30 days. Here we are 120 days later and still not complete. Mm-hmm. Okay, that type of stuff. On commercial, these guys give you a bid. Usually it's higher than a residential contractor as well. But they get it done on time. And usually the contracts that we do with them, there are actually penalties in there if they're not.
Yeah, you got to write that in.
But they get it done on time. And they do it right. I've seen too many cases where, we've had to go back. It's like, well, and I'm not a contractor, but for instance, there's some type of sealant grout or whatever between a sidewalk connecting to a building, something that you put down there. Well, I remember this one building we were looking at, and he said, no, that's the wrong type.
You can tell.
It had to be torn up and redone.
Oh, wow.
That type of stuff. Well, how much more does that cost you than what you were really paid somebody to do? Or, you guys are investors. You understand the velocity of money, right? If you're relying on something to get done in 30 days for your numbers, and even 30 days past that now, it starts blowing your numbers because you have carrying costs, right? You have the insurance, the electricity, payroll if you're keeping your own people, that type of stuff.
Yeah.
Right?
So we talked about Tim. I want to know, will people when they're coming to you, it sounds like they need to be a little more prepared with their dollars. In our market, the Virginia area, not every owner is good for every piece of commercial.
Well, that's true, and I consult on a national basis too, so it's not just our market.
Oh, okay.
And
nationwide.
Yeah, I actually I broker deals throughout the Mid-Atlantic. So.
Sweet East Coast.
Yeah, but I consult and everything on deals, portfolios, you name it, nationwide.
How do you know if a person? I know you mentioned earlier you look at their existing portfolio to see where this is at. What are most people looking at? Are they looking to grow? Are they looking to just diversify, more income?
Some are looking, it's all over the place. Some are looking to build wealth. Some are looking to build a legacy. Some clients are looking literally just, hey, I want to open my own office or something like that. I do leasing too.
Oh, okay.
Yeah, to a certain extent.
So it's A to Z. It's not like when I picture commercial, I just look at the tycoons that are going in, like that X amount of dollars.
Yeah, everybody looks at that. And it's not just the money. You also need to know, one, I'm really big, especially given my financial planning background, right? I'm really big on what's your risk tolerance as well.
Regarding the asset itself?
Yeah, regarding what you're talking about investing in. I don't care if you're talking about stocks or if you're talking about real estate. An investment, by its very nature, incurs risk. And so if you're sitting here, like I was telling you, hey, I have $100,000. Well, how would you feel if that suddenly dropped to 80,000? Oh, well, I can't do that. Or do you need to have access to that 100,000 within, say, 2 years or 3 years? Mm-hmm. Well, yeah, I need to be able to take it out at any time. Then you shouldn't be investing in an asset like this. Mm. You know, a lot of people don't realize when interest rates zoomed up. Last year, commercial real estate in general dropped 20% in valuation.
Get out of
So
here.
that's a real example. Those are real examples. I'm telling you. Your property was worth $1 million before, and now it's worth $800,000. Remember the income analysis approach I was telling you about?
Yeah.
Okay. Remember a reasonable cap rate? Interest rates go up, cap rate demands go up. So if you were wanting 7% before that, let's say for instance that property is generating, that property is generating $100,000 a year in net operating income, and a reasonable investor wants a 10% cap rate. Mm-hmm. That's $1 million on that property, right?
Okay.
Well, that cap rate's based on what can I get putting my money in the bank. So interest rates now go up, I can get a whole lot more money in the bank. Mm-hmm. Not to mention your borrowing cost. If I could borrow money at 5% and get a 10% return, that's great. But now when you go to, it's going to cost me 7.5% to borrow money, all of a sudden that spread for the risk you're taking may not make sense, right? So two things happen there. One, lenders pulled out completely. I mean, the lending market
for
commercial real estate transactions dropped 70%.
Get out of here, too.
70%. So for the people out there that are talking about being agents, keep that in mind. Our transaction count, you guys think you had a bad year last year. The commercial broker side,
y'all got slaughtered.
We dropped 70% last year in transaction count. That's a statistic. It's not my numbers. You can look it up. And so we got crushed. And then, but lending, you couldn't get lending. And then there were no properties out there, because just like the residential side, a lot of your sellers, all of a sudden, and this is a real example. I had somebody, I told them their property was worth $3 million about 2.5 years ago. Well, they finally decided to sell it. I said, well, your property is actually worth only about $2 million right now. Or 2 I forgot the exact number, but basically Lord. Knock it off by over 20%.
Are most of the sellers participating in the financing too, Tim, or are they wanting to be cashed out?
Well, I'm known for creative deal making. Okay.
Explain that a little bit so they understand.
Owner financing in some cases, which actually has certain tax benefits to the seller as well, right? So owner financing, if not all, then partial. There's
for
also
people that don't know, just explain what owner financing is, if you don't mind.
Okay. Basically, the seller becomes the bank. So you say, okay, fine. I know the lender. Instead of going to the bank, so now you're going to go to the seller and say, hey, I'm going to pay you so much money every year. This much interest, this much money down right now. We're going to amortize it over so many years for the loan. Usually we'll make it callable, and we can talk more about that later. And it also has advantages, though, with the seller. I'm not an accountant. Confirm with your accountant, okay? This is not tax advice. But for a seller...
Informational purposes only.
Potential. I don't want to even say informational purposes.
Potential.
Yeah.
All right.
But for a seller, real estate's one of the few safe havens in this regard, right? If I go out and sell a business and I have $1 million profit in it, gains in it, I have to pay my capital gains tax the year in which I sell that business, right? Okay. Even if I agree to take, let's say $1 million profit, and I agree to take $100,000 a year over the next 10 years, I still have to pay all in the year in which I recognize it.
When you did the sale?
Yeah.
Oh, wow.
Okay. I believe that's still the case.
Oh, man. That's nasty.
Yeah. But in real estate, you only recognize the gains in the year in which you receive the proceeds. So I can actually amortize that amount out.
I love it.
Which also means I can reinvest more money, right? There's a thing out there called the wealth accumulation model. And basically it's when your money's earning money, interest on it. So instead of you putting that money in your pocket, you put that interest back into, or your returns back into your investments, and now it's earning interest.
Yeah.
So it's called the wealth accumulation model. And that's how you build true wealth.
So we're on seller financing. So we're talking about you. I want to make sure I got to keep you in the lane.
Okay, yeah,
So
you're right. Because I'm sorry, I'm a geek about this stuff. I will go on and on. I've written articles on this stuff, you name it.
Cool. So when someone comes, I want to talk about them selling the property. Tell me how it comes about. They ask you, everybody thinks their property is worth more.
Well, of course, that's no different. Well, for the most part. In commercial, the larger the deal, the more sophisticated the seller, they understand. And that's one thing that I really like about commercial real estate. For the most part, it's more of a business decision.
They're not moving into it. Well, is it mixed use sometimes? You got somebody living in it and they buying a...
Well, you get that too, but I'm talking about it's still...
Generally speaking.
Yeah, generally speaking, right? If I own a shopping center, I may have built it up and everything, but I'm going to be realistic about the numbers. If nothing else, because your lenders have told you about that shopping center. Your loans are reviewed on a regular basis. So you're going to get all of that. And it's less emotional. It's not to say that emotions don't come into play, especially with what we call the mom and pops, okay? But it's less emotional.
Everybody's there to make money. It's not like
they understand, even and take losses too. Right? It's like, look, this is the value of your property, and that happens. As far as the sellers coming to me, you asked about that later. I get the referrals. Repeat clients are a really big deal, and because my clients know, one, I'm incredibly ethical, right? So if somebody's a client of mine, I'm going to give you my advice, even if it means it's going to cost me money. We're going to walk away from this deal, or I advise you not to do this deal. You and I were talking about that earlier. It's like, I'm going to advise you not to do this deal. Now, if you still want to go ahead with it, that's great. I'll be your agent, but my advice is you don't do this deal. It doesn't meet your criteria.
Just walk away, man. Do you find people have a hard time walking away in commercial? Because they have a hell of a hard time walking away. Tim, they'll buy a house for $100 and $200 cash flow and then come to me to help fix the problem. So do you get the same thing?
Yeah, multifamily in particular, and this is particularly pertinent to your audience, by the way. What was the first thing everybody wanted to buy when inflation started taking off and interest rates went through the roof?
They wanted to buy, I guess, investment property.
Yeah, but like your residential investors wanted to buy apartments, right?
They were looking to do apartments.
Because real estate, of course, is a hedge against inflation. So everybody out there, and I heard this, I'm going to go throw my money into it. Well, what happens? A lot of those deals, the smaller deals that we've seen, and we're still seeing it, by the way, the smaller deals, those investors are buying for cash these properties.
Oh, man.
Now, they're using, they're not getting an appraisal done. The lender's not advising them.
There is no lender.
That's right. They're buying cash, right? So you don't have a lender. They're not getting an appraisal done, and they don't know enough themselves on how to price a property properly. And then a lot of them have representation that doesn't know how to price a property. So they're paying cash for these. And
a lot of dumb cash out there, bro.
Yeah, that's exactly it. I mean, I literally had I can remember some people coming to me. Remember when rents were growing at over 12% a year?
That's 19, 20, 21.
Yeah, exactly, right. And in our market here, by the way, had one of the highest rental growth rates in the country.
I had to have doubled, Tim, I would think. Rents here probably, I was getting $700-800 now. I'm getting $1,600 on some stuff.
Yeah, but the problem back then, but the thing is that, especially on multifamily, okay, investors coming in, and cap rate's just a starting basis. Technically, you should actually do your cash flow projections for 5 years if you're a buy and hold person, okay? And they're projecting 12% annual growth rate in their rents every year. I'm like, that's unrealistic. Don't do that. Because of course you're going to wind up, especially when you discount some of your future cash flows to today's net present value, at 12 or 13% rent growth.
You can't sustain it.
Yeah, and then you're showing expenses only growing at 3% a year as well.
Can't sustain it.
You don't have your numbers are flawed. Well, look, based on this, in 5 years, this property would be worth, this much. I'm like, that's ridiculous. That's not sustainable. And you need to use more of a naturalized rate growth. So they wind up getting in there, and then all of a sudden they wonder why they're upside down. And by the way, this didn't just happen to smaller investors. This actually happened, especially in the multifamily side. Well, actually just in commercial in general. It's why you've probably heard out there that there's over $1 trillion coming due in commercial debt.
I don't really research commercial a lot.
Okay. Commercial debt, we may amortize for 15 or 20 years.
Okay.
But usually it's callable. So it's going to be callable. That means...
It's got a balloon on it?
Yeah, it's like a balloon, right?
Okay.
The lender doesn't have to call it, though. So a balloon you actually have to pay off. Callable just means the lender can force you to pay it off.
What is that callable term usually, 5 years?
It depends. Usually they're between 3 to 5, sometimes 7, sometimes annually. And what happens, the lender can call you in, say, show us all your financials on the property, show us your financials, and...
Oh, man.
Yeah. So interest rates double overnight. Now, a property that you bought at 4% interest, right? So you're saying, hey, this is my debt coverage ratio, 4% interest, is now at 7%. One, the lender has to call it. I mean, they're sitting here going, we can't keep lending you money at 4% when it's costing us 5 or 6% to borrow. So they're calling those loans. Then on top of that, now they're calling a loan for a property. Let's go back to that $1 million example. Property was worth $1 million when you took out the loan. Well, now you may still have cash flow off of it, but they still want debt equity in the game. Well, that same property now is worth only $800,000. So you may have put down 20% before, but guess what? You're coming out of pocket for more just to service that loan and continue that loan.
To keep the loan?
To keep the loan.
Oh, because they want to make sure that their equity is protected.
There you go.
Oh, wow, Tim. Prostitute and the pimps.
Yeah.
I don't know if that would happen to single family one, Tim, but that's a little different story.
Yeah, it's a whole different ball game. And lending, you and I were talking about, lending is a whole different ball game, period, in our world.
Are these loans, are typically the loans adjustable rate loans, Tim, or are they typically?
That's what the callable does, right? You can do adjustable rate loans.
Yearly.
It's up to the lender. Every lender is different. There is no, you don't get the standardized stuff that you get in residential as far as loans, right? If you've got a really good mortgage company and a loan,
and a relationship.
Yeah, it's about your relationship.
Got it.
They may have occasionally a different type of product for something special, but for the most part, right? As long as they're really good and it's a reputable company, it's going to be across the board. That's not the case in commercial. So it's important that you know which lender is looking for what right now, what their criteria is, and that's going to change on a quarterly basis, just so you know. So that's the other part that's very important on the commercial side. You have to know those relationships.
Lenders are coming and going too? You said it's changed?
Well, every bank's different. It varies every quarter on what they're looking for.
The actual lending institution?
Yeah. It varies on their portfolio. It's like, hey, yeah, we'll finance your apartment complex. We'd love to finance you this quarter, right? But the next quarter, they're like, we'll finance it, but we really want more of a down payment, higher of a debt coverage ratio, and instead of a 20-year amortization, we'll amortize it for 15 years. And instead of a 5-year call, we're going to put a 3-year call on it.
That changes quarterly.
And that changes quarterly because they're required to hold a piece of the portfolio now on their own books. And that's why you heard about the stress test, for instance, that happened when interest rates started going through the roof. That's why your large lenders out there like BB&T, well, now it's not BB&T anymore, Wells Fargo, you name it, they all put moratoriums on any commercial investment lending right off the bat. They came in and said, we're not doing any new commercial investment lending for right now.
I didn't know that either.
Yeah. And, I was working a deal. I won't name the institution that she worked for, but I was working a deal. But they hadn't started the loan process yet. We're just cementing everything up. And before I get to that stage, I always make sure my clients, or even the buyers for my clients, either way, that they're lending, they're good. You know, I get a lender saying, yes, we can do this. I mean, obviously it's still subject to the paperwork and everything else, but it's like, yeah, but
soft approval.
Yeah, it's a soft approval, right? And which takes a whole lot more in commercial than it does in residential. So we get that. We're at that stage. Literally the final letter of intent on this, buying this the shopping center is what it was. And we cleared the other hurdles. Like for instance, shopping centers, there's certain issues with dry cleaners, certain types of dry cleaners and things like that lenders don't like to. We've cleared all these hurdles. And I called her and she goes, Tim, let me call you back. She calls me back at 5:30. And she's like in tears. She goes, that was a phone call. Unless a loan is already in process, no new investment loans, period. Nothing.
Wow.
Any type. And she's in tears. She goes, Tim, because it's not just your loan, think of all the other deals that got to work. Because she specialized, her whole niche, right? She really worked well with brokers and investment deals. So she just lost literally her entire book of business.
Well, Tim, you talked in wholesaling and residential, somebody gets a contract, they flip it to somebody else. Is it the same thing? It didn't require any money to be. I'm just thinking about my roundup family that's watching. They don't have large down payment money.
No, you don't. Just like residential, you get started in wholesaling, right? It's a great way to go make some money. You're willing to do the legwork. Well, if you can do that in commercial. You find the deal. Now, keep in mind, usually you need to get a contract for longer than 30 or 60 days. I will tell you that. It depends on how much is done. You know, are your surveys done? Is it already zoned for what? All this other stuff. But you can wholesale it. You know, I don't care what you pay for a deal. If you bring me a deal and I've got a buyer for it, I don't care what you paid for it, as long as it makes sense to my client. And
you see a lot of that? Wholesale and commercial?
I don't. Because a lot of people out there that wholesale properties, they don't think about that on the commercial. So I try to let investors know that, especially on the residential side, they want to move up.
Bigger numbers too, right?
Yeah, just make sure you know what you're doing, or at least have a great relationship with a broker. Now, you can pay for the coaching, or you can, or you better be giving that broker business. Know what they're doing, in which case they'll help, or you can pay them on an hourly rate. Hey, take a look at this deal for me. Well, here's my fee.
You mentioned something about not necessarily finding a lot of deals on market, on LoopNet. We want to talk about LoopNet, but I'm just saying that's just the standard. And I'm an amateur when it comes to commercial. You know, all I've got is just LoopNet in my head. That's all I really know.
That's because LoopNet paid a lot of money to be that way, yeah.
No doubt, they paid for that. But I'm saying, are you telling me that generally speaking, these deals happen through relationships as opposed to...
A lot of our deals are relationships, right? If I have a client, now there's a difference. That means you have actually signed an engagement letter with me to appoint me as your exclusive agent. Then a lot of the stuff we do, let's say I call up a buddy of mine over at Colliers or JLL, right? Or CBRE. Those are big names that your entire audience should
Another
recognize.
brokerage firm.
Yeah, those are three of the top largest commercial firms in the world.
Got it.
So, and I call up a buddy of mine over there and go, hey, John, I've got a client. And they're looking for XYZ.
What you got?
Yeah, and he goes, oh, Tim, in that case, I know somebody who'd be interested in selling. They just don't want to actually list it or market it. So he calls up his contact.
Relationship that he has.
And we bring the deal together and broker the deal.
Out of 100 deals, what is the percentage that go like that, Tim, as opposed to, for residential, they get an agent, they go on the MLS, they see the houses, all right, let's go look at them, make an offer.
I've never actually tracked the numbers, but a large percentage of the deals we do are off market, not because somebody's calling. For instance, even on my listings, it's not somebody calling me from a listing, from the marketing out there.
This majority then.
Yeah, it's like I'm reaching out to those agents as well when I get a listing. Mm-hmm. Hey, I knew you were looking for this. I've got this coming to market. Now, it'll still go into the system a lot. Not everybody does that.
It's a technicality.
I put a lot of mine in, but
that's a technicality.
Yeah, at that point, it's already under contract. Now,
hold on.
if it's going to be a really good price, it'll be under contract. Now, I may reach out and let's say you're on the other side, right? And I'm representing the property, and you go, all right, let's say it's $1 million property. And all right, Tim, hey, yeah, I'll buy it. Hey, look, I'll put it under contract right now, $800,000. Well, my job is to represent my client. And I'm pretty certain that we can put it out there at $1 million and get that. I'm very good at pricing properties, very good. So I'm like, well, Kris, hey, man, I love you, but no, I'm gonna have to put that out there. Now I'll give, now if you want to offer something close to $1 million, and it's not just about price, and this is the case in residential too, I'm sure you'll agree. It's not just about price. It's about how quick can you close, contingencies,
so much more
all the other factors that go into it, right? And
the sellers, for some reason, think the price is such a big thing. I'm like, that is usually not my seller's motivation.
There you go, right?
They could care less, really.
Yeah. Well, here's a tip. I'm sure you know this. I don't know if your people do yet. But for instance, on the owner financing side, right? Somebody's motivation to sell may be, hey, I want to retire and move to Florida. Oh, well, how'd you like just a nice steady stream of income? It's like, oh, well, I'm going to go down and live with my kids in Florida or help take care of my grandchildren or something like that. Yeah, great. How about we build you income, build you more income. So you get a nice check every month. Same thing in commercial. We get that too.
Okay. It's so weird. What you just said is exactly my business model. We do seller financing, rent to own type things.
Yeah, there you go.
Same thing, Tim. Tim, why is it so challenging for my clients to help them understand that renting real estate is not always the best? Being a landlord. Yeah. In fact, most landlords in residential, Tim, I don't know if you know, they're losing.
No, I didn't know that. Really?
Yeah. Say you got $300 a month cash flow.
Yeah.
Let's say that.
Okay.
3 years, you got vacancy, you got turnaround, you got repairs. You're making $0.
Ah, that's where it's different then.
You're not making any money because you have to maintain the property.
Okay, see, in commercial, I don't think I'm making $300 a month. The only two types of cash flow that I look at are before tax and after tax.
Before tax, gross and net.
Well, I look at net operating income. So I have the gross income, less vacancy, less property management. You always factor in property management when you're pricing a property. Because even though you self-manage, you have to look at it from the perspective of the buyer, and you don't know what they are, right?
When you go sell it.
So all the way down to operating expenses. Those are those expenses that you expect to reasonably occur via property taxes, that type of stuff.
Yep.
All the way down, that's your NOI at the bottom of that. It does not include debt service, and it does not include personal taxes.
Got it.
And then after-tax cash flow, you factor those two things back in. See, so maybe that's part of the issue. When we're thinking cash flow, we're thinking net operating income cash flow.
For the whole building.
Yeah, it also doesn't count your capital expenses, by the way, your CapEx expenses.
Repairing the property, the big stuff.
Yeah, the big stuff.
Roofs,
there's a difference between patching a roof and replacing a roof, right? Yeah. One's a capital expense, which you depreciate
over time.
Yeah, versus I get to write this off for the year.
I hope y'all getting that stuff. This is Guy. Last question, Tim. Private money. I haven't used the bank since 2009 in my business. I've been extremely fortunate. How many people? We use private people. Private lenders finance all my deals.
That's how you guys roll, man.
I mean, I'm just thankful. How many people? Is that common in commercial too?
I rarely turn to them. I have advised a client when interest rates and stuff started going back up, and a lot of investors pulled the property off the market, right?
At that time?
Yeah.
They're like, I'm just going to keep it.
They said, I'm going to keep it because I'm going to wait for interest rates to come back down and all this other stuff. And I mean, think about it. You see a sudden 20% hit in your asset. Yeah. Oh, man.
You can still sell a finance though, Tim.
Well, that's the other key. I do a lot of that, right? When I'm on the buy side or even on the sell side, I recommend the seller financing. It's like, hey, look, let's offer this. Hey, if you pay this higher price, we'll finance it. Or on the buyer side, let's try to convince them to do the under financing deal.
But the private money, how many times?
But the private money.
How many times you see people saying, "Look, I'm going to buy this house.
Yeah,
I got $1 million. I got my people going to loan me this, and we're going to go and roll."
I have a fairly decent sized investor, and we're scanning for deals. I'm like, look, nobody's selling right now because of that fear. They're waiting. It's going to be a while. I said, but maybe you should look at doing private money. I told him that. I said, put your money. He had $10 million in cash. I said, so I told him, I said, look, go out there and he's connected on some of the investor networks. I said, you got to just put yourself out there that you're offering private money.
Yeah, that would be a great deal for that guy.
Yeah, a few points out of pocket, you get 12%.
Yeah, no work, no liability. You're not even on title.
And give you an idea, that first year after the interest rates, if I'm not mistaken, I believe that private money was like the number 2 source of financing, actually, even on commercial.
Really?
Yeah.
All right, y'all hearing it, man. Private money, y'all. Work your money with people. Tim, if I would ask you, is commercial a people business?
It's very much people. There's no standardized MLS. I talked about CoStar and LoopNet. That's for some markets. That's not all markets. There are a bunch of other systems and ones that you have to look at in other markets as well. Okay, but a lot of the deals we do are just that. It's because of relationship. It's not just finding out about the deals. It's also because commercial real estate in some ways it's easier or simpler, not easier, but in other ways it's a lot more complex. There's a lot more knowledge, a lot more. The learning curve's a lot steeper.
And there's not who has a friend that does commercial.
And you're not as protected either, right? By the consumer protection law and stuff. So a lot of it is like, I need to know you on the other side. You saw me right before this thing started. I was on the phone, and she's actually in Florida right now, and we're trying to do a deal. We're on both sides. Yeah, she's on the other side. I'm on this side, but we're working out. We know each other and we trust each other. So it's like, well, what do you think? And she goes, well, yeah, it's like, let's try to do it this way, or maybe this will work. So we're trying to work it out. It's very much a win-win, but that's because we know each other. We've known each other for a while. We trust each other. We've done business together. I know how you operate. I know that you know what you're doing.
Got it.
And that's really hard. For your people out there, look, form a relationship with a commercial broker or take coaching. And Kris and I can talk to you later about that. Take coaching, get trained, take CCIM classes. It stands for Certified Commercial Investment. They're not easy. They're not cheap. I don't have my pen on right now. It's on my jacket.
Coat,
And form those relationships. It's all about relationships because you can have all the education in the world, but it's not going to open the doors for you, or you'll be the last one to hear about deals.
Is there like we have RIAs around the country? Real estate investors.
I'm a regular speaker. Yeah,
I'm just saying, is there one for commercial? Is there one for commercial, or is it all tied in?
There is not. I broached that idea with somebody from Trig a while back. I said, look, we got to start just a local.
That would be cool
commercial
too.
RIA, right?
Cool too.
And
I know
they just didn't follow with it. I mean. And I've got the meeting space to host it, but it's...
Would put that on the table then.
If you want to do it, I mean, or an investor seminar for some of your people, or even, if you want to run a class,
Question, Tim, and we get out of here. I want you to let us know what your final thoughts. But do you recommend everybody doing commercial, Tim, or is this...
Period. Remember I used to run a financial planning division, right? Everything for me is about your whole risk return and how your overall portfolio flows.
What if you ain't got, like for me, somebody can come say, Kris, I got $80,000. I want to buy my first rental property.
Okay.
I'm like, cool. Let me see if I can help you. So for you,
well, I don't do residential.
That's what I'm saying. Okay. So for you, it's like that client. You can't even service that client.
I would not service that client appropriately. Legally, could I?
you try to do something, but I'm just saying,
Yeah, I
generally
point them in the
speaking,
right
Tim,
direction. Yeah.
There's a certain level of client that has to be prepared. I'm asking
Yeah.
before they could. Like, I can take a guy with 10 grand.
Oh, look, yeah.
I'm just saying, I
I tell you to wholesale in that case. Yeah.
Okay, so, all right.
Especially if you want to get started wholesaling it, just like in residential, right? It's like, hey, maybe I don't have any money, but these wholesalers out there are making.
I know they're crushing it, man.
Holy crap! I talked to one the other day down in North Carolina. We're talking about a commercial deal, but we were talking. He goes, look, I'm going to sell this commercial property because I'm putting more residential. So how much money are you making on residential? Just out of curiosity. He goes, we're making a minimum of 50 grand.
For wholesale.
I said, hold on, you told me that you're doing like $125,000 properties, and you're making 50 grand off of that?
Wow.
Maybe I should start wholesaling. I mean, I thought it was like 10 grand or something a house. I didn't know 50 grand.
I heard commercial wholesaling was, Ron even said it. People are getting land and rezoning it for commercial or industrial, whatever.
Yeah. Now the issue you got to keep aware there though is
it's not overnight.
It's not overnight. It's hard to rezone the property unless you have a legitimate contract. Okay. In other words, it's an actual purchase agreement. Because think about it, usually if you're going to rezone, you're raising, if nothing else, you're raising the seller's property taxes on that property.
There you go.
So they need to know that you can reasonably close on that property. Yeah.
But it is possible. All I need to know, is it possible?
Yes.
It's hard,
absolutely. Wholesale deals.
Hard for a camel to go through the eye, but it is possible. Jim Rome says, I can deal with hard.
I love Jim Rohn. Yeah. If you don't know Jim Rohn, you should look him up.
Yeah.
Wow. Yeah, it's possible. And start wholesaling if you don't have the money, or pool your resources. Get with somebody who does know what they're doing to help guide you. And move ahead with that. I mean, trust me, it's exciting. But just like residential, I mean, you get into it, it's creating the systems, it's working the system, it's getting the proper education, the proper mentorship. I'm really big on mentorship, right, and coaching type of stuff. Every successful thing I've done, I always latched on to people, to coaching, mentoring.
Gets you there faster.
Plus the education. Yeah, it substantially elevates it, and it keeps you from making those mistakes. Right? I mean, I can tell you right now that I wouldn't know how to, I don't know, I know you do all this stuff, right? I wouldn't know how to go out, buy a house, and turn around, sell it for 50% more, create cash flow and everything else off of it.
Different skill set.
Yeah, it's a different skill set, right? I know the general overlay of how it might work when you explained it to me. I'm like, how do you do that? How do you find the person? How do you talk to them into doing this? Same thing on commercial.
Yep, got it. Well, Tim, this has been cool, man. That's all the questions I got, bro.
All right. Hey, I really appreciate it, man. Thank you. And like I said, I'm a geek about this stuff, so I can sit here and talk all the time.
Yeah, I want to niche down eventually. Will you come back and I want to niche down?
Yeah, I'd love to, man.
With buyers
I'd love to.
Make sure you subscribe to the channel, like the content, but biggest thing, share. Share this around so people can understand that commercial is not a mystery. There's only a few people.
Yeah, it's not harder. It's different.
Harder. It's not harder. It's different. I heard you say, in fact, I heard you say it's not necessarily more difficult. Some deals can be a little more simple.
Yeah.
All right. See you the next time. Peace.
Take care, people.